habemos nuevo fractal de resistencia. Vamos a ver. Hello everyone, welcome to the channel. My name is André Cardoso, and for today I want to cover some of the Forex pairs and some of the patterns that may emerge in the market. Let's see if the DXY finds some pressure at these levels, potential elements of resistance now starting to emerge on the dollar. Let's see how the market will react from here. Last week we called your attention to the inverted head and shoulders pattern formation for the DXY, the potential violation of the resistance level printed at $100.37, and we saw a decent move towards the 200% Fibonacci level, not reached yet, projected at 102.40 and converging with the 38% Fibonacci retracement level. So we are almost there, but as we can see, we have also an element of pressure, the trendline resistance covering the previous highs, now approaching the highs on the dollar, or the recent highs indeed. So that being said, we have also extreme oversold readings for the DXY. So I will not be surprised to see a small pressure emerging to the downside for the DXY, even though we still a few points below the default target for the head and shoulders and a few points below the major 38% Fibonacci retracement level. Of course, most important for those who were trading with the dollar to the upside and specifically considering the inverted head and shoulders pattern, I believe this is a price zone where at least you should start to partitioning your trade and start to move your stops to break even, or even if possible to profit, and start to manage your position. So that being said, let's move forward. At the same time, we have the cable trading below the fractal support level printed at 32.11. It's now trying to recover that level, but we have a fractal at 132.58. But also the 200% Fibonacci extension level and the default target for the inverted head and shoulders pattern formation lies at 130.66, which means the price may be forced to trade lower and eventually to reinforce this trend line support. This is an ascending trend line support that may start to unfold if the price falls again or drops into these levels again and starts to reinforce this trend line support. This may form the handle, the expected handle for the cup that we mentioned, that we have mentioned before last week. That being said, also pay attention to potential support to start to emerge if the cable approaches these levels of default targets. Of course, I don't need to remember if the price suddenly breaks above these levels of resistance, we may see a squeeze higher and new higher highs for the pound. The same may happen for the euro dollar. Of course, we are far away from the highs at this point, and most important at this point for the euro versus the dollar, golden Fibonacci extension already achieved at 110.75, which means we are entering the bullish crab pattern territory. We have also the 38% Fibonacci retracement right below at 110.40, and of course the 200% Fibonacci extension, the default target for the head and shoulders pattern formation. So as you can see, a drop below this daily fractal support level at 112.66 guide us into this drop, towards the golden Fibonacci extension level. So that completes the bullish crab pattern for the fiber. Don't get surprised to see an attempt to recover and eventually a retest of these levels again. Just to remember, 4 hours time frame chart, 240 minutes time frame chart, so pay attention on that. The Aussie also pushed to the structure support of that ascending wedge that we called their attention last week, a push to the support levels, and we saw a bounce. That bounce actually, in terms of visual patterns, not confirmed yet, but we may see this as a potential head and shoulders pattern formation. Let's see how much time the Aussie will need to unfold with this right shoulder. Ultimately, the recovery, the violation of this fractal support level 63.43 may force or may trigger that move to the downside for the Aussie. I will pay attention to this 62.50, where a bullish deep crab pattern lies projected at the golden Fibonacci extension level. So we are talking about the potential move towards the golden Fibonacci level. I will wait for that pattern to form if the price drops below the support. Of course, first of all, we pay attention to the potential breakout of the support that may trigger a nice trade to the downside, and then later we will pay attention to this level of pressure at the golden Fibonacci extension level. Let's jump into the Kiwi. Very much the same situation. 200% Fibonacci extension level. Default target for the double top formed above lies at 57.85. It's a 200% Fibonacci extension level, and that will imply the Kiwi to trade at 38% Fibonacci level. That also implies the Kiwi to break below the previous support level. This is a monthly fractal support, by the way, from last August. Will imply the recovery of that level, which means, a move towards the 50% Fibonacci retracement will not be a surprise if the price can't be, if the Kiwi can't find support at the 38, which, in order to achieve the default target for the double top, it needs to break below those levels. So eventually it will be forced to search for the retracement level at 57.57, the 50% Fibonacci retracement of all these swing to the upside. That being said, pay attention to not only to a drop to the downside, but also to this pressure zone if reached. We have also the dollar versus the Swiss franc. We call your attention to the potential ABCD pattern, or the symmetrical projection, better saying 84.76, that converges with the move towards the 38% Fibonacci retracement level. As you can see, we are also trading the trend line resistance of this parallel structure to the upside, so I will not be surprised to see the dollar versus the Swiss franc also being pushed or printing a pullback. We have nice extreme RSI readings overbought, so I will not be surprised to see that happen. Dollar versus the Canadian, of course the same can happen. The market can start to pull back from those levels, but we are a few points below the 38% Fibonacci level, the default target for this pattern, 140.52. It's important to consider a move towards these levels, and then if achieved, I will not be surprised to see a pressure to the downside starting to emerge from this 38% Fibonacci retracement level, which may act as an element of resistance and pressure to the downside, even considering the extreme overbought conditions. I will not be surprised to see a small push to the highs, to new highs, and to print actually to achieve those 38% Fibonacci levels. Now let's jump into the dollar versus the Japanese yen and some of the other Japanese yen pairs. Symmetrical pattern completed for the at 148.55. So basically we have a symmetrical move, very similar as the Swiss franc, 148.55. So don't get surprised to see a small pullback from this area. But ultimately, the price of the pattern that I'm paying attention to, or that I have more interest on, it's the bearish alt pattern at 152.62. That's a 113% Fibonacci extension level. So I will pay attention to a push to these levels, and if that happens, it opens the door to a nice pullback for the dollar versus the Japanese yen. The pound. Exactly, the pound versus the Japanese yen also, actually we're still struggling to break above this weekly fractal resistance level at 195.97. If that happens, I will pay attention to the bearish butterfly pattern, which lies below the monthly fractal resistance level. Aussie versus the Japanese yen, bearish alt-bat pattern projected at 97, right above the weekly fractal resistance. I want to see the formation of that pattern in order to hunt all the stops positioned above these fractals. A lot of traders will start to short the markets below the weekly fractal resistance level. They will put their stops above the previous highs and the previous fractal level, and that's where the bearish alt-bat pattern enters into the equation. So basically we wait for those stops to be hunted at 97, and if that happens, we will start to consider the possibility of a pullback once confirmed. This pattern can also extend, actually this pattern can extend to the golden Fibonacci levels, and this configuration will turn the bat pattern into a crab, and that may offer also a nice short opportunity. And as you can see, just casual technical analysis here, if you consider the crab pattern at 101.74, the 38% Fibonacci retracement, which is a default target for that pattern, lies at 95.74, which converges, actually it nails the weekly fractal resistance, which means the violation of this fractal resistance actually may trigger a retest of these highs and the formation of the crab pattern instead of the bearish alt-bat pattern, even though we always pay attention to the pattern that the market will complete next. Okay, of course you can ignore this one and wait for the next one, but taking into consideration the range and the difference between one and another, we are talking about 5%, almost 5% distance between one and another. We can also consider initially one first attempt, let's say one first attempt to try to short it at 113, and of course if the price fails and keep trading higher, we have a second opportunity to trade once we approach the previous monthly fractal resistance level. Okay, so this is something to consider. If the price pushes to the golden Fibonacci level, the default target for that drop, okay, we have a perfect confluence or a perfect convergence between the projected target, if then with the previous resistance level. New Zealand.
Transform your trading with Forex Analytix new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
New Zealand versus the Japanese yen. Approaching the 224% Fibonacci extension level, we anticipate, based on the default projections for this price pattern, we can anticipate a drop similar to 4.4% from the completion point. Okay, so we have the 50% Fibonacci retracement at 83.69. That's the default target for the shark pattern, the 50% Fibonacci retracement level. If that pattern completes, we may anticipate a move towards these levels. That of course offers you a nice risk reward opportunity. So we are expecting a 4.4% move as a drop. So you already know you never enter the market to lose more than what you expect to make as profit. So always take that into consideration. Euro versus the pound, approaching structure support or eventual structure support. We have a trend line approaching from the highs, from the lows, and eventually it may act as an element of support, but ultimately a drop below these levels may trigger a retest of the weekly fractal and eventually the formation of another bullish alt-bat pattern, this one projected at 82.61 for the euro versus the pound. Attention to this support level. We have also extreme oversold readings already starting to emerge for the pair. We have also the euro versus the Aussie, another pattern that I'm waiting for, the bullish alt-bat pattern, 168.41, 113% Fibonacci extension level, another one to consider, an approach to the previous weekly fractal resistance level. Nothing strange in this process. A retest of these levels may offer support, and if that happens, we will target a move. We can target, expect a move towards the 38% Fibonacci retracement level. Euro versus the New Zealand, very much the same situation, multiple patterns projected between 186.91, 186.46, basically converging with not only the weekly fractal support from this year, March, and we have also the previous monthly fractal support from last year, from August, at 186.49, converging with the bullish alt-bat pattern completion point, the 113% Fibonacci extension level. So the formation of that pattern may offer an opportunity to try to recover for the euro versus the New Zealand. Let's jump into the commodity market. Let's start with gold. We saw this pullback on gold last week. Actually, we anticipated a potential three-wave swing to the downside. Actually, the market at the end of the week has found some pressure and support at 32.92. This is the 61.8% Fibonacci retracement level, and already during actually overnight, gold approached the previous daily fractal support level at 32.01. We have also a bullish bat pattern or alt bat pattern at 31.70 that converged with the 61.8% Fibonacci retracement on gold. We have already oversold readings also for the commodity. Things that we should consider: the bullish alt bat pattern will also converge, or may also converge, with the reinforcement of this trendline support. So from this channel, this parallel channel to the downside, that may converge with the reinforcement of this channel, which means it may favor attempts to recover on the gold market. Even though if the price can't find support at these levels, it may be forced to trade even lower, of course, and if that happens, we will pay attention later at the golden Fibonacci extension level 30.54. Silver, very much the same situation. We saw the drop towards the 61.8% Fibonacci level, and overnight we saw also the silver market dropping below the support level, the intraday support level at 32.20 cents. This very much the same situation here. We have the 113% Fibonacci extension at 31.43, right below the previous lows in daily fractal support level. That may offer some opportunities if you consider the pattern to recover from the drop, or even a push to the golden Fibonacci extension level 30.65, which may converge with a push, very close to the 61.8% Fibonacci level. Nothing to ignore. So do not ignore this possibility on silver to be pushed even lower. And if that happens, we already know. So we have immediately below the daily fractal support, we have a bullish alt-bat pattern. In my opinion, in this situation for silver, I will wait for a drop towards $30.65 or towards the golden Fibonacci level. Also considering this is kind of an expanding wedge. Very, very, very tricky to trade those structures. So that being said, wait for, I prefer to wait for a big drop on silver towards the $30.65. Crude oil, we have a broken resistance at $60.45. We also mentioned the potential edge and shoulders pattern formation, the inverted edge and shoulders pattern formation. We have targets. We are very close to the default target at 64.04, which converges with the previous daily fractal resistance level, as you can see. And patterns to consider: the bearish shark pattern, this one projected a few points above at 65.60 or 65.65 if you wish to consider the retest of this previous monthly fractal support level, also from September on crude oil. Bearish shark pattern, 224% Fibonacci extension level on crude. SPX 500, we have been calling your attention to this potential move towards this previous resistance level. This is the weekly fractal resistance printed at 57.94. We saw these signs of bullish hidden divergence, which usually suggest, a print of new higher highs and the continuation of the momentum to the upside. And the same exercise applies here for the SPX 500. Many traders will put their stops above these resistance if they want to short the market, and that's exactly where the market completes the bearish alt-bat pattern. 59.24, 113% Fibonacci extension level. As soon the price completes that pattern, I will expect a pullback towards the 50% Fibonacci, the 38% Fibonacci retracement level, which implies a violation of these previous lows at 55.79, 55.80, and basically a retest of this point B and this structure resistance 5500. Okay, that's the default target for the bearish alt-bat pattern. Once completed, we expect a pullback. The German DAX already trading above the previous fractal resistance levels. Pay attention to these clear bearish signs or bearish divergence on the German DAX. Approached the formation of the bearish alt-bat pattern at 24.75. So that being said, this pattern didn't complete the pattern just by a few points. Don't get surprised with a potential drop on the German DAX also after approaching this 113% Fibonacci retracement extension level, and specifically after threatening the violation of the previous monthly fractal resistance level. So a pullback will not be a surprise. Finally, bond, 10 years, we have nice support broken at 110.16. We are approaching a crucial level. Actually, I prefer to wait for the 161. We are approaching the 127% Fibonacci extension. This may complete this move will complete the bullish butterfly pattern. Okay, we have the 78.6% Fibonacci right there holding this point B. Then we have a bounce, and then finally the 127% Fibonacci extension of this swing to the high projected below. So this is where the bullish butterfly pattern will complete for the 10 years. But we have also the confluence between the 161% Fibonacci extension level with the previous lows and weekly fractal support. So I will not be surprised to see, a squeeze to the lows or a push to these lows, and then an attempt to recover. If that happens, 38% Fibonacci retracement level, it's a default target for the bullish crab pattern at 109.06. The market may be pushed to the previous support level 110.16. That's the default target for that crab pattern. Finally, the BUND breaking support as we speak. The market is, I was expecting actually a violation of the resistance, as you can see, completely failed. And so we are moving, we are breaking support. So I will expect more, more momentum to the downside at this point. Let's see how the market approaches the previous support level, guided by this golden Fibonacci retracement level, 128.60, monthly fractal support level, also from May last year. So we saw this level being very important recently. Basically, we saw being used as a resistance and as a support most recently at 128.69, basically the golden Fibonacci acting as element of support. So if the price approaches this level again, I will be attentive to that possibility. One of the other possibilities here, and of course considering the market will fail a violation of the resistance, so I need to adapt to this new structure. One of the possibilities is a push below this monthly fractal support, so a new break below these levels again, and eventually an approach to this weekly fractal support level, and that may guide us into another bullish alt bat pattern projected below the support level. Okay, so we will pay attention to that. We are far, at least for now, we are far away from that possibility. You know, we saw the price respecting the previous highs and monthly and weekly fractal resistance level at 131.99, incapable to break above it. We had this fractal support marking the point B for this bullish alt bat pattern. So if the price breaks below these levels, we should pay attention to the formation of the bat pattern below. But as I said, for now, and because I was expecting, you know, because I was expecting a violation of the resistance, I need to adapt, and at this point I need to wait for and adjust to the new, you know, the new price structure the price is trying to unfold for me at this point. So basically I need to wait because the market has failed my expectations, so I need to adapt at this point. And finally, let's finish with Bitcoin. And as I mentioned last week, there was a possibility of a move or a break above the resistance placed at 97.93. We called your attention to this ascending wedge pattern formation, and well, one of two possibilities, or a break below the support and the retracement, or a breakout above the resistance, and of course a move towards the previous structure highs and monthly fractal resistance level. So we are now into there's a small consolidation period here, with Bitcoin approaching the 224% Fibonacci extension level. So this is the kind of a second option and the last option for the shark pattern on Bitcoin to work, and that's placed at 106.60, 224% Fibonacci extension level, just right above the recent highs. That's all for today, and I hope you have a nice trading week ahead. And if you enjoy, put below in the comments if you have any doubt or any question or anything that you want to clarify, your charts, your ideas, where you think the market goes. I always enjoy to see what are you thinking about the market. So that being said, I hope you enjoy the content. Put your comments below, like, subscribe to the channel, and I hope to see you in the next one.